Hello and welcome to Crypto Invest TV. I'm your host, X8, and let's go ahead and get this rolling. As you can see, apparently it looks like the Senate has rejected the changes to the crypto rules for the $1.2 trillion infrastructure bill, despite the lawmakers and billionaire pushback. Says. Following days of negotiation, the Senate on Monday struck down a bipartisan amendment to overhaul and clarify newly proposed cryptocurrency tax reporting requirements, including in the Senate's $1.2 trillion dollar infrastructure bill, dealing a potential massive blow to a slew of companies concerned they could be forced to hand over transaction information to the Internal Revenue Agency. The Senate on Monday rejected a last-minute amendment to specify that new regulation forcing businesses to report cryptocurrency transactions in excess of $10,000 to the IRS should only affect traditional brokers or businesses who conduct transactions on exchanges where consumers buy, sell, and trade digital assets. Senator Richard Shelby struck down the amendment by objecting to a request for unanimous consent, which would have only adopted the measure of no senator objected to the proposal. Shelby signaled he would only reserve his obligation if senators wrapped in his unrelated amendment to boost military spending by about $50 billion, but Senator Bernie Sanders struck down Shelby's proposal, citing climate change concerns fueled by the defense industry. A group of 5 senators led by Pat Toomey and Cynthia Lummis introduced the cryptocurrency amendment early Monday to clarify language on the infrastructure bill targeting party facilitating cryptocurrency transactions on the behalf of another, a provision many experts and lawmakers criticized as overbroad last week. The unnamed provision sweeps in non-financial intermediaries like miners, network validators, and other service providers, including, it doesn't say here, but including developers, which we all know how that could be rather negative. I mean, if they have to show all their transactions during even development, I mean that's really not going to play out well in the long run. Um, Says they and don't have users information needed to report to the IRS. That's what that is essentially going over, but that's what was also shot down. The provision has fueled concerns that officials may use guidelines to clamp down on non-broker parties in measures that could ultimately dissuade intermediaries like cryptocurrency miners from setting up businesses in the United States. Critical quote: developers are the lifeblood of innovation, and subjecting them to tax reporting would have far-reaching implications on privacy and the evolution of technology in this country. Not to mention, most developers would not have access to useful data for the IRS in the regards of talking about DeFi. 28 billion. That's how much Congress's Joint Committee on Taxation estimates the enhanced reporting requirements proposal would generate in a physical revenue over the next decade by giving taxpayers and the IRS more visibility into taxes owed on crypto transactions. Key background: tucked deep into the Senate's 2,702-page infrastructure proposal released last week, the proposed cryptocurrency regulation quickly caught the eye of the industry, experts, and lawmakers. This should have been required a long time ago. Eric Perry, a Texas-based certified public accountant at Perry Accounting, told CNBC on Tuesday, adding that targeted requirements could ease the complications and at times unclear reporting process for cryptocurrency transactions. There's no real reporting on tracking or tracking mechanism. It's up to tax professionals to do the subjective analysis, he said. And while many industry groups have came out and unamended proposals for language that claimed that it was too broad or too vague to define brokers, others also welcomed the regulation as the watershed moment for cryptocurrency adoption as Wall Street gets more comfortable with regulatory framework governing Bitcoin and crypto assets in general. Institution adoption of Bitcoin is going to accelerate. Billionaire Michael Saylor, who heads MicroStrategy, which owns more than any other corporation, tweeted last week. Echoing concerns of the industry, billionaire Coinbase Brian Armstrong also reported requirements a great idea for the financial services firms in the tweeted thread last week, but warned that the provisions could have had profound negative impact on the crypto in the U.S. and unintentionally push cryptocurrency companies offshore, which is correct, especially when you consider the fact that if they're going to start pushing people as individuals to have to give their you know reporting for anything that's over $10,000, I mean it's gonna make it less likely for even retail investors to want to be involved if they're going to be in the United States, and they might try to go to other areas that either fall into gray areas or a completely different country altogether. But since we're talking about that, we'll go ahead and we'll move on into our next topic, which is cryptocurrency mining under proposed U.S. policy changes. It says the impact of tighter crypto reporting requirements in the digital asset provision of the Infrastructure Investment and Jobs Act that will concentrate on cryptocurrency mining. Says that the regulatory scrutiny of blockchains and cryptocurrencies is increasing from cryptocurrency mining ban in China to President Joe Biden's working group on financial markets, convened by Treasury Secretary Janet Yellen. The economic activities that support and are enabled by blockchains have become a significant concern for policymakers. Most recently, a provision in 2021 proposed in the infrastructure bill amends to define the definition of a broker, which is what we were going on earlier. But essentially what it is the stated goal is of this is miner as broker. Policy changes to improve the collection of tax revenues on cryptocurrency capital gains by enhancing the ability of tax collectors to observe cryptocurrency trades, since cryptocurrency miners regularly validate transactions that transfer digital assets such as cryptocurrencies on behalf of cryptocurrency holders. These miners would appear to satisfy this definition of broker. Unsurprisingly, many of the cryptocurrency industries have raised their concerns. One key feature of blockchain technology is competitive decentralization record keeping. The pros and cons of this new form of record keeping relative to the traditional centralized financial databases are in an active debate, but the new regulation might produce a premature end to this debate. What are the direct consequences of defining miners as brokers? First, miners, at least those located in the United States, would be subject to significantly enhanced requirements of reporting to the IRS. The cost to the miners of complying with such requirements is likely too large and will be likely too large and largely fixed. Miners would have to bear these costs regarding how much mining power they have before they could mine a single block. This will deter entry and likely cause more centralized control and concentration of mining power. Second, these broker miners would be responsible to satisfying the know your customer regulations. Given the pseudo-anonymous nature of cryptocurrency, such a policy would limit the types of transactions broker miners would be able to process to non-anonymous transactions. How would this work? Presumably, I would register with a miner, linking my driver's license with my Bitcoin address. As an example, miners would only validate the transactions on behalf of their registered users. But if that miner happens to be small, like they have a small mining operation, then my transactions are less likely to be processed on the Bitcoin network. Perhaps it would be better if I and or you register with a larger miner, or perhaps we should just all use Coinbase and allow the miners to handle transactions on behalf of Coinbase. Again, the impact here is greater than the concentration of mining power. Combine this with the policy is likely to increase the concentration of U.S. cryptocurrency mining while raising the costs of mining and possibly reducing the overall amount of mining taking place in the United States. That is, the policy would shift mining within the United States away from the shadowy, faceless groups of supercoders recently described by Senator Elizabeth Warren, but perhaps increase the reliance of users on such faceless supercoders outside of the United States. What are the global consequences of defining miners as brokers? Part of the global impact proposed provisions in the infrastructure bill depends on the relative importance of the U.S. cryptocurrency mining operation with context of mining worldwide. Recent history provides a perspective. In June, China stepped up enforcement on its Bitcoin mining ban, and a result of fewer miners. We can see this in drop in mining difficulty observed back in July. The mining difficulty governs the rate of the transactions processed per 1 block per 10 minutes. With fewer miners, the difficulty falls to keep transactions at a constant rate. So the thing about this is that essentially what cryptocurrency basically does, before we move on to the next topic, is you could say it almost kind of can divide the wealth among countries, right? Because if let's say if someone in America is either processing transactions for someone in China or someone in Australia or wherever, you could say that in a way they're getting a portion of the Australian or Chinese or the UK. You could say that they're getting a portion of the money, like kind of like how we say when people work in the country and then leave the country with that money back to their country, how they're taking money from the economy. You can say that cryptocurrency is kind of doing it, but what it's doing is it's basically leveling out the economies across the board. All economies that are involved with cryptocurrency, you can say that it can help level out economies to make it to where all economies could be prosperous within a certain spectrum, right? Just kind of as a basic broad example. So when it comes to doing things that would essentially make it to where we don't want to be a part of the traditional way of the cryptocurrency mining and transaction process, if we want to sit here and make it into a way that's completely essentially privatized and centralized, then people aren't going to want to be there. That's essentially what this article is saying in the other article previously. And so you can see where that can end up having a negative impact, especially for any country that's choosing to make cryptocurrency an issue in their country. Because as all of the countries adopt it in a more healthy manner, then we can see the leveling of economies across the spectrum. But we'll go ahead and we'll move on into the next topic, which is Circle to become full reserve bank amid stablecoin scrutiny. So it says Circle runs its USDC stablecoin under state banking regulations. Now it's seeking to become a federal bank with which will increase its oversight of its reserves. It says in brief, Circle says it will become a national digital currency bank. The move will mean federal oversight of the USDC and increase reporting requirements. The stablecoin giant Circle announced Monday it intended to become a national digital currency bank, a move that would place it under direct supervision of the Federal Reserve and various agencies ran by the United States Treasury Department. Circle CEO Jeremy Allaire, who announced the move in a blog post, said the shift to full reserve banking would strengthen its stablecoin USDC, which currently has more than 27.5 billion in circulation. The stablecoin came under scrutiny last month after Circle published a report showing that while the majority of USDC was backed by dollars, its reserves also included corporate bonds and commercial paper. Allaire appeared to acknowledge concerns over this arrangement, writing, however, market observers have correctly focused attention not just on reserve sufficiency and credit quality, but also on fundamental questions of liquidity, including liquidity in times of intense demand to redeem USDC. Currently, Circle operates under the state money transmission regulations, which are less stringent than those of the national banks must follow. It's unclear from the blog post whether it plans to become a national bank. Whether it plans to become a national bank will require Circle to replace the corporate bond and commercial paper portion of its reserves with dollar equivalents. Allaire states that Circle has always extended the bank-grade liquidity requirements defined by the international agreement known as Basel III. It is clear, though, that the move to become a federally regulated entity will require Circle to publish more detailed reports about its operations, including the nature of its reserves. All of this comes amid growing attention to the role of stablecoins in the banking system. So, essentially, we'll have to see. I know there is a lot of controversy going on with USDC right now, and how some people feel like they're essentially no better than if they were some people find them to be no better than if they were, essentially Tether. They feel like some people feel as though they're basically one and the same, but I think we'll just have to see moving forward. I think Circle is definitely making some moves that we haven't seen with Tether, so it's definitely something to look at. But moving forward, we'll go ahead and move straight into yet another high-level exec leaving a crypto exchange. The departure, exec director Brett Redfern leaves Coinbase after 4 months. The departure of Coinbase's VP of Capital Markets points to a strategy swift within the public traded crypto exchange. Coinbase VP of Capital Markets Brett Redfern is out after just 4 months on the job, a Coinbase spokesperson told CoinDesk. The Wall Street Journal was the first to report the news of the former Securities and Exchange Commissioner official leaving the company at the end of July. The rift points to a strategy swift within the publicly traded crypto exchange, unnamed sources told the paper, with Coinbase to swift its priorities away from digital asset securities, the report said. A source with knowledge of the situation told CoinDesk the priority Swift reflected growing consumer demand for access to decentralized finance. As we looked at prioritizing DeFi, we we deprioritized the digital assets security area. The reportedly admissible split with Redfin comes as actions in Washington and beyond cast doubt whether tokenized stocks comply with current regulatory frameworks. Binance, in particular, has been hit the hardest for the securities products, abruptly discontinuing their product mid-July. So, I mean, this is yet another person that we've had quit in the crypto industry, in like almost the past like couple of weeks. We've had, almost one person a week almost now. But onto a little bit more positive news. We can talk about Shark Tank's Mr.Wonderful shills Ethereum as ultrasound money after the EIP 1559 launch. Says Kevin O'Leary, a Canadian investor best known for his role as Mr. Wonderful on the reality competition show Shark Tank, has made a U-turn on cryptocurrencies this year. He's now driving straight towards Ethereum after the network's London upgrade last week, which started creating deflationary pressure on the Ethereum price. If Bitcoin is sound money because of the 21 million coin supply ceiling, Ethereum enjoys the same benefit now, O'Leary told viewer on Cameo, an app for people to pay celebrities to shoot short videos. It's ultrasound money because there's no supply floor, said O'Leary in what amounts to a paid ad for ETH. And it says Mr. Wonderful talks about Ethereum IEP 59 and the EIP 3675, the merge, and Ethereum's cash flow positive and ultrasound money. O'Leary was referring to the effect of the EIP 1559 code within last Thursday's London hard fork that changed the network's fee structure. Instead of fees going to miners, they now go back to the network and are burned or permanently removed from circulation. With the Ethereum supply growth rate decreasing over 18,600 ETH, around $59 million have been burned since last Thursday, and the price has risen by 21% in the last 7 days. The Shark compared it to a business becoming profitable, with more revenue coming than expenses going out. Profits being burned, he suggests, the equivalent of giving the stock dividend to shareholders. Like some other major investors, O'Leary publicly shifted his stance on Bitcoin as the cryptocurrency market cap swelled in the second half of 2020 and peaked at the early of 2021. On record calling BTC hot garbage in 2019, he shifted in March to an investment strategy that involved placing 3% into Bitcoin and Ethereum. Mr. Wonderful co-stars Dallas Maverick owner Mark Cuban, also a big prominent, uh, a big proponent of Ethereum. In April, he told podcast host Laura Shin, obviously with EIP 1559, everything changes. What happens going forward is going to really impact how people perceive it, specifically as a store of value. Cuban making a larger point that Ethereum already has utility, given NFTs and smart contracts on the network. EIP 1559 reinforces its use as a store of value. Some outside traditional investment world have been quick to point out the effects of EIP 1559 are still being tested. I think EIP 1559 is quite cool, but anyone making predictions about ETH supply thanks to the EIP 1559 is going to be proven wrong in any direction. Tweeted former Zcash executive director John Cincinnati. But yeah, so, there is still some people that are extremely skeptical on cryptocurrency, and then there's some people that most certainly feel otherwise on it and feel like if you haven't gotten in, maybe you should get in now. And I think that's essentially probably the way that Mr. O'Leary or Mr. Wonderful feels about it. Moving into the last main subject of the day, which will be Axie Infinity. Axie Infinity becomes Ethereum's first NFT game to hit 1 billion in sales. A fifth of Axie Infinity sales took place over the past week. Ethereum-based NFT game Axie Infinity crossed 1 billion in sales. Data from CryptoSlam shows. As of this writing, 1,055,000 worth of tokens from Pokemon-inspired NFT game have been traded hands through 2.4 million transactions. There are 324,000 buyers, 936,000 owners, and more than 1 million daily active users. The milestone is the latest piece of evidence to show that the blockchain game launched in 2018 has truly gone viral this summer. Almost a fifth of Axie Infinity sales took place in the past week, and 3/4 concluded in the past month. Axie Infinity is the first game to surpass 1 billion in sales. The next best-selling game is NBA Top Shots, the basketball trading card game, which runs on the Flow blockchain, has racked up 675 million all-time sales. Ethereum and an Ethereum-based CryptoPunks with 657 million. What is Axie Infinity? Shed the blockchain from Axie Infinity, and the game plays like a simple monster battler. Axies have various stats that determine their fate in battles with other players. Just like Pokemon, the inclusion of cryptocurrencies makes the game a lot more lucrative than Pokemon, incentivizing players to spend and, with any luck, earn. Crypto also makes Axie Infinity incredibly expensive. While new Pokemon games cost under $60 for 100 plus hours of the experience, a single Axie Infinity monster costs a couple of $100. Even this green slurb costs $60. However, unlike Pokemon monsters, players are free to sell their Axie Infinity tokens on secondary markets, and given today's milestone of 1 billion, they clearly are. In November of 2020, the Vietnamese developer launched Axie Infinity Shards, a governance token that lets players vote on the future of the game. The token has boomed in the past month. AXS has a market cap of 900 million. Now it has a market cap of 2.6 billion. Sky Mavis has also launched a decentralized market for 90,601 plots of virtual land from which players can develop their bases of operation, gather resources, craft items. Plots frequently sell for over 10,000, even though most gameplay features for land haven't even been implemented yet. So I mean, there's definitely new ways of making money in today's day and age. I mean, there's people that are quite literally breeding Axie Infinities and then turning around and selling them, and quite literally 2 or 3 of those will like pay for their entire month's worth of expenses, and then their day job is kind of just like, all right, this is going to be my play money, or even vice versa. It doesn't matter either way, because they're ensuring that in either direction they're having all of their needs and then beginning to have all of their wants met. With that being said, those are the main subjects of the day, so we'll go ahead and we'll just look into the market right now. Bitcoin sitting at 46,000, Ethereum at 3153, Binance at 353, Cardano at $1.47, XRP at 81 cents, Dogecoin at 25 cents, Polkadot at $20.56, and Uniswap at $28.84. As for today's big winner, it looks like Ravencoin is up 27% for today and up 76% for the week. Following behind them would be Internet Computers at $63. They're at a 16% gain with a 57% gain over the week. And then Chili's is at a 16% gain with 20% gain over the week. Harmony at a 14% gain with a 19% gain. And then FTX with 12% and 33% respectively. And then last, I'll say Litecoin at 11% and 16% respectively at 165. As for the BSC tokens, the top runners of today is, it looks like this Shuttersu. I'm not sure. They ran up 79% for the day, 82% for their week. Antimatter is up 59% for the day, 42% for the week. IoTex, they're up 29%, 41% sitting at 2 cents. So still actually a pretty good price for anyone that's looking into getting this into some cryptos at a really cheap rate. Same for this Shachiti or whatever, the Suitor. Just look them up. I'm not even sure. You know how it is though. You try and wait for the next dip if it was something you're going to try to get into. Go and look them up, do your research, see why it's pumping right now. Impossible Finance, they're up 21%. Unify is up 20%, 41%. Unicrypt is up 19%, 28%. Swipe 18%, 32%. On just straight DeFi, Delvira, they're up 45%, 77% for the week. QuickSwap is up 35%, 66% for the week. Orion Protocol 34 and 38. UMA is up 21 and 29. Keep Network is up 20 and 24. And then we've already said Swipe is up 18 and 32. So that is it for today, guys. If you like what you see here, if you want to see more, if you like making money with crypto and you want to be kept up with the latest news, go ahead and make sure to smash that like button, hit the subscribe button, ring the bell notification icon, and then we will see you again on Wednesday. You guys have a great one, and Crypto Invest is out.